All right, let's get more color on this report with Gene Munster. Gene is the managing partner of Deepwater Asset Management. Gene, great to have you with us. You make the point, though, according to the notes that I've gotten, that the operating margin number X credits, the numbers don't add up. Can you explain?
It's a little bit of a mystery on a couple points on this. Of course, the two biggest questions are around margin and separately related to what demand is. So let's start with the margin and the EVX credits. Phil talked about a number of 24.8%. That's the number that I generally I think is accurate. Separately, I've seen other people who are close followers of Tesla report a number of 25.9%. Either way, it's soft, it's light, so that's probably the most important takeaway. And of course, the critical point on this topic of margins is what is their guidance going to be? And I just want to fill in, Tesla does have an outlook section in their report, and they talk about their margins going to be higher than the automotive industry. The automotive industry is loosely at 16% margin. Last quarter, in the September quarter, I should say, they were at 27%. I've talked about maybe it's 25. Well, let's just call it 25 right now. You can drive a truck through 17% is higher than 16, and 25% is higher than 16. So we need some clarity on that, and I think that's going to have a big impact on how the stock trades tomorrow. The second quick piece that I'm just trying to get the numbers to line up is they also say in that outlook section that they will grow faster than 50% and end the year at 1.8 million vehicles. 1.8 million vehicles is up 37% from last year. And so, usually it's pretty clear what happened, what is happening. In this case, I need a little bit more clarity. This could just be simple mistakes on my end, but I just need more clarity.
Could they, they say actually in the Outlook section, 1.8 million cars. Could there does it make more sense mathematically if we are just talking about cars as opposed to vehicles? Maybe they're not counting crossovers or whatnot. They're being really fine in terms of how they slice it.
Could be, but it's the difference between 37% and better than 50. It's 200,000 vehicles. It's a pretty wide gap. And if you look at S and X and semi, it wouldn't even be close to those. So, and I think they would also be considered cars. And so, I wish I could have. I would love just to give you a very clear answer about, what this is. My sense is that they're guiding for a number of 2 million because I think demand has just skyrocketed since this price cut. And ultimately, I think the street was at around 1.8 million. So I actually think once the dust settles here, the message is going to be margins are coming down, just like people had expected. Demand is going up, just like people had expected. And ultimately, the true, this is probably going to end up being a little bit soft in the near term, Tesla shares, and probably just kind of be sideways over the next quarter until investors get a better sense of what the underlying growth is outside of these price cuts.